You ever get that feeling that the tax man is watching? Well, in this explainer, we're going to pull back the curtain on a massive, automated global system that's designed to do exactly that, track our money wherever it goes.
Right? It's that nagging question in the back of your head when you're filing your taxes. And honestly, the answer is getting a whole lot closer to yes than you might think. We're talking about the end of financial secrets as we know it.
So, how did we get to this point? Well, it all kicked off with this huge, coordinated global war on tax evasion. The goal? To make the entire world's financial system basically transparent. You see, for a long, long time, governments knew that just incredible sums of money were stashed away in offshore accounts, totally invisible. And that's a ton of potential tax revenue, right? But there was this one giant problem. How do you even get that data?
And that really is the multi-trillion-dollar question, isn't it? I mean, you can't just send an army of auditors to every little corner of the world. No way. The solution had to be bigger. It had to be systematic, totally automated, and completely international.
And that's exactly what they did. Big international players like the G20 and the OECD got together, and they pushed for one single global standard. The idea behind it was actually pretty simple. Instead of this endless cat-and-mouse game of hunting for information, what if countries just started automatically sharing it with each other?
Okay, so let's dig into the nitty-gritty. How does this massive global information network actually work? It's all built on one really important core idea.
And here it is. This is the key to the whole thing. It's called the Common Reporting Standard, or CRS for short. The best way to think about it is like a universal language for financial data. It makes banks and other financial institutions all over the world collect the same specific info. And then, here's the kicker, automatically send it to the tax authority in the country where you, the account holder, actually live. And what makes this so incredibly powerful is the sheer scope of what's being reported. We're not just talking about a little bit of interest income here. No. They're sharing everything. Account balances, dividends, what you made from selling stocks. It's basically a complete financial snapshot of you, and it's all zipping across borders automatically. Now, I know what you might be thinking. How is this even possible for hundreds of millions of people? It sounds like a logistical nightmare, right? Well, somebody on Reddit put it perfectly. We are all greatly underestimating the power of prepper servers/databases. Yeah, because this system isn't run by an army of accountants with those little green visors. Not at all. This is all about raw, brute force computing power and just massive, massive automation. And this right here is the most important thing to understand. The tax agency isn't sitting around waiting for you to tell them what you made. They probably already know. Why? Because your employer, your bank, your stockbroker, all of them are legally required to report your financial life directly to the government. So here's how it works. You've got all this data pouring in from third parties, right? The computers just take that data and automatically match it against the tax return you filed. And if there's any little discrepancy, like say a 1099 form you forgot about, boom, it's flagged instantly. A real human being might not even look at it until the very, very end of the process. And that is the real game changer. Think about it. The old way of doing things, it was slow, it was expensive, and really it could only catch the most obvious, glaring errors. This new way, it's instantaneous, and it can spot these super subtle patterns and statistical oddities across millions and millions of returns, stuff that no human could ever hope to find. Okay, so we know what computer is doing the first pass. The big question is, what is it actually looking for? What makes that digital red flag go up? Well, in the US, for example, there's this algorithm called the discriminant function system, or DIF. What it does is it gives every single tax return a secret score. The higher your DIF score, the more likely you are to get that dreaded letter in the mail. And that score is all about how different your return looks compared to the statistical average for people like you. Here's a super simple example of something a computer can spot in a nanosecond. Round numbers. Think about it. When do your actual expenses ever come out to a perfect, even number, like $5,000? Almost never, right? When you report exact amounts down to the penny, it shows you have receipts and records. But big, round numbers, they just scream, I'm making this up. And oh, there are plenty of others. Like if you're reporting big business losses year after year after year, the government starts to wonder, is this a real business or just an expensive hobby? Or maybe you're donating way more to charity than anyone else in your income bracket. Claiming you use your car 100% for business. Yeah, that's another classic trigger that gets the algorithm's attention. And you can see right here just how dramatically that risk can change. If you're a regular W-2 employee, you take the standard deduction, your audit risk is, it's practically zero. But the second you add a small business into the mix, especially one with losses, or you have any kind of international income, whoosh, your risk level just skyrockets. And look, if you do get audited and things don't go your way, you're not just paying the tax you should have paid in the first place. The penalties can be absolutely brutal. We're talking about a huge chunk of money added on top of your final bill. All right, so knowing how this whole system works, how do you reduce your own personal risk? How do you stay off that algorithm's radar? Let's talk about some real practical steps you can take. Honestly, a lot of it just boils down to good habits. First, keep amazing records, like receipts for everything. Second, report all of your income, even the little stuff from 1099s, because trust me, the computers are going to find it anyway. Use those exact numbers with the cents, not round estimates, and just make sure your deductions look reasonable for someone in your line of work. And this right here is exactly why it's so important to get this stuff right. Because if they decide that you underpaid due to fraud, the penalty can be a jaw-dropping 75% of the tax you owe. And get this, that's on top of the original taxes and all the interest you've racked up. Ouch. So look, there's no question this whole system is incredibly good at catching tax cheats. But it also means that governments all around the world are building this massive, permanent record of our entire financial lives. So it leaves us with a pretty big question to think about, right? As the world of money becomes totally transparent, what have we really gained? And, more importantly, what have we lost?